All right, let's get practicing in QuickBooks Online. Grab the link below in the description so that you can follow along. All right, here we are in the QBO gym, and the QBO gym is a place where we have numerous exercises that simulate real life scenarios that you may encounter as a bookkeeper. Every single month, we come out with new exercises and we break it down for you into 4 different sections. So today we are going to be working in the October strength training section where we really focus on sales tax. At the top here is a little animated video to give you a little synopsis of what's going on that month in Craig's world. He is our fictitious business owner. Further down is an interactive quiz to test your knowledge as it relates to the video up above. And then further down are all of the exercises within this section. So today we are going to practice invoicing with sales tax. You will need to be in the same session of the sample company that you used in the previous exercise. If you have not completed that exercise yet, go ahead and click on the link on the top right corner of your screen. That'll take you to the first exercise, complete that one and the second one, and then come back to this one. So our scenario today is that Amy's Bird Sanctuary has ordered a rock fountain for their flamingo enclosure. Craig also previously did some custom design work and he has asked you to send her an invoice with everything together. So let's see how we would do this and take a deeper dive into the sales tax while we're using it or while we're at it. As a reminder, in this and the following exercises, we are working with general sales tax principles and they are for educational purposes only. Your client's sales tax, even if they are in California like Craig's is, he is in the sample company, will be different. So just remember, this is all for illustration purposes. You need to actually work with your client's accountant to get the correct tax information so that you can have this all set up correctly. So to get started, we're going to click on the plus new button and then select invoice. So here I am in the sample company. This is the last page that I left off of from the previous exercise. Go ahead and click on the plus new button right over here, and then under customers, select invoice. And you will see an invoice transaction up here. Again, this is for Amy's Bird Sanctuary. So under customer, select Amy's Bird Sanctuary. So click into it. You will see that she happens to be right there at the top. So go ahead and click on that. And when you do, her information will populate, as well as you see on this side, a little pop-up drawer showed up with billable time for custom design. This is what Craig was asking to be invoiced in addition to the rock fountain. So in order to add this to the invoice, all we need to do is simply click add. So click on the blue add link right there. And when you do that, you will see that it has taken it from the pop-up drawer over here into the invoice. You'll notice that the design work is not marked as taxable, and this is not because it's a service type. That's not the sole reason why, because as we saw in the previous exercise, even services can be set up to be taxed. The reason it is not showing up as taxable here is because inside the details of the product service, it is marked as non-taxable. Remember, QBO is not automatically going to assume that if it's a service, it doesn't get taxed, and if it's a product, it does get taxed. It's how you as the bookkeeper or the client, when you have set up the product service, it is what you make that selection to be, whether taxable or non-taxable. So we need to add the rock fountain. To do that, on the second line under product service, we're going to select rock fountain. So click into this second line 2 times. You can start typing in rock for rock fountain. Go ahead and click on that. And you will notice that when this one gets added to this line, that the box where it says tax is actually checked. And that is because this is taxable. It's set up to be taxed. Let's take a deeper look at how this is calculated. So scrolling down to the bottom of the invoice, we'll see that QBO has calculated the tax to be $26.13. And it's showing a 0 right now. It's because it's still selected. It's still showing as selected in this line. Just go ahead and click anywhere on the page outside of that line, and you'll see that the tax rate has changed now to, or the tax has changed to $26.13. It's been added there. So if you don't see it immediately, just go ahead and click out somewhere on the invoice here so that it does show that calculation. So this tax rate is based on location, which means it's using the automatic calculations programmed into QBO. Alternatively, you could select one of the custom rates that we set up previously or add a new one. So here is those custom rates that we had set up earlier. You could always select one of those, or you could always add another rate right there. Remember, the custom rates that you see here are just because the sample company converted them from an old system. In real life scenario, you wouldn't see them unless the client has similarly, there we go, upgraded from a different system. A more common use for custom rates is for occupancy or accommodation tax for some types of industry. Also, keep in mind that you cannot set a custom rate per product or service item on the invoice. Once you set a custom rate, it applies to everything on that invoice. So you don't get to pick and choose, it's for everything on that invoice. So to see a little bit more detail of how QBO calculates the tax, let's click on See the Math. And that's right under here, this 2613. Right under there, there's this little link that says See the Math. Click on that. And when you do, it'll show up. And this pop up on the side, there are three different sections here: customer, location and addresses, and products and services. So as we mentioned before, QBO uses three things to calculate sales tax. One, the customer's tax exempt status. Two, the location of the sale and or the location of the customer. The collecting agency really is the one that determines if one of these or both is going to be used. And number three, the type of product or service being sold. So as you can see and See the Math, the See the Math screen shows all three of those things. The customer section shows whether the customer is tax exempt. You can always change it here if necessary, but we'll take a look at that in another exercise. This section also shows that the tax rate is automatic based. It shows that the tax rate is the automatic based on location rate. You can change this to a custom rate here if necessary. Changing it here or changing it on the previous screen, as I mentioned with that drop down, have the exact same effect. So let's go ahead and change the custom rate just to see what happens here. We're going to click on the blue edit button in the customer section right there. Customer in that top one, click on the edit link and you will see this expanded out. So under default tax rate, select California at 8% and then click save. So go ahead and click on that little arrow to expand it, click on California, and now click on the green save button. And now it's showing that the default tax rate is for California. Notice that this setting overrides all the other settings. It completely disappeared. So if you are using a custom rate, you can have neither a locality nor product level rate. So we're going to click on edit, and then under default tax rate, we're going to go back and select based on location and then click save. Just wanted you to see like what would happen when you did try to change that custom rate. So click on that edit again. Click on the arrow to drop down and then change it to based on location. Click on the green save button. And now all of the other information has come back and appeared for us. The next section there determines the location and addresses used in calculating the sales tax. Some localities base tax on where the item is sold, which is the business address, which is in the accountant settings. Some localities base the tax on where the item was purchased, the shipping address if it's different than the business address, and some localities include both. Luckily, QBO knows all of this, so you don't have to. But you can edit this section here to add a shipping address if you did not include one on your invoice. If the jurisdiction requires tax, you can also add the agency right here as well. So that is in this, all of that is in the second section. You can do that by clicking on the blue edit button to make any kind of adjustments that we just discussed. The third section displays which tax rates are being used based on the product and service selected on the invoice. So in our case, the rock fountain does not have a special rate, so the standard rate is applied. It's the same one shown in the section that above it. So in the See the Math pop-out, you also have the opportunity to override the automatically calculated sales tax. So we're going to go ahead and do that and click on Override this amount just to see what happens there. And here is that third section right here. It is not recognizing it as a special tax rate, so it's just going with the standard, the one up above. And so now we want to click on this blue Override this amount, click on that link, and you'll have a little bit more information up here for you. So there are times when you do have a legitimate reason to override the pre-calculated sales tax. For example, maybe your jurisdiction has changed its rate and QBO just hasn't quite caught up yet. It shouldn't happen often, but it does happen. So just keep that in mind as you are working through your client's books. When you need to override, you can open the drop downs to display tips from QBO to help you decide whether to proceed. If you are sure that you do, then you can enter a specific percentage rate or you can use a specific amount to use. Either way, no matter which way you choose, for auditing purposes, you must select a reason for overriding the tax before you confirm. And that's just because if you ever get audited, you need to have a paper trail and an explanation of why you did what you did. So really only do it if you are 100% sure that you need to override it. Otherwise, follow what QBO has automatically calculated. So we're going to go ahead and accept the current rate. So just click close and then click yes to leave without saving. And here is those expanding. You could click on the arrow and it just gives a little bit more detail here. Here is that rate percentage or the amount, and then you have to choose a reason as to why you are overriding it. So we need to go ahead and just click, I said, we're going to click on close and then select yes when we want to leave without saving. So click on the green close button. It says, do you want to leave without saving? Yes. Click on the green yes button. And so we are finished with Amy's invoice. So we're going to go ahead and close it. In a real life scenario, of course, you would want to send this to Amy. You would do save and send. But since you cannot send invoices in the sample company, we're going to go ahead and save and close. So go ahead and click on the little arrow here and then click on save and close. And it has now been saved. And that is how you would invoice with sales tax. And if you have any questions or want to know more about the QBO Gem, just go ahead and click on the link below in the description. Be sure to leave this session of the sample company open as you will need it for the next exercise in the strength training section where we focus on sales tax liability. And I will see you in the next video.